Propose them now, and if not, could I have a motion to approve those minutes?
All lowercase.
I'm not on this committee.
You're not on this
We're not on
committee.
this committee yet, no.
Is Beryl on this committee?
Yes.
John,
We're just trying to sign on so we can get at the documents, and right now,
Yeah.
Can't get on.
right, that password doesn't seem to work.
I couldn't sign on either. They're actually looking at my laptop right now.
Well, that
It's not,
might
it's not
be
your
elected.
laptop, there's at least 3 offending.
You can't get in there.
Yeah, okay, so there's 3 of, okay, so there are 4. I'm the other one.
I tried all lowercase, I tried up and lower.
So
So-
somebody want to move the approval of
I'll
minutes?
move it.
You'll move it. Beryl, will you second?
I will second it, yes.
All in favor? Aye.
Aye.
Anyone opposed? Hearing none. The minutes are approved. Kim, before we start, I want to welcome our auditors. Jeff Driscoll is here, Benny Hadnot is here. I'm sure there are others here as well who I don't know as well, but welcome.
Thank you. Appreciate it.
Kim.
Thank you, John. Good afternoon, everyone. If I could direct your attention to the binders that you received last week. I'll just start with an overview of the materials that are included in the binder. So the binder is really divided into 3 main sections. The first section related to our annual financials for the year ended March 31st, 2016. That covers tabs 1 through 6. The second section covers our annual investment report in tab 7 and 8, and then tab 9 covers the annual public authorities report. So if we move to tab 1, we'll start with the financial section, and I'll go through the memo that was included in tab 1 that really gives you an overview of all the materials associated with this first section of the binder. So behind tab 2, you'll find the auditor's report, their opinion on our financial statements, our management's discussion and analysis, or MD&A, as well as our basic financial statements and the associated notes. KPMG is expecting to issue an unmodified opinion tomorrow on the financial statements. Turning the page, the next 2 items in the memo refer to the materials in tab 3. Those are 2 additional reports issued by KPMG. One is on our internal control over financial reporting and compliance. KPMG has not found any material weaknesses and no instances of non-compliance. In terms of the report on compliance with the requirements of Section 201.3 of Title II, that relates to DASNY's obligations to comply with the investment guidelines of the Office of the State Comptroller, as well as our internal policies and guidelines associated with our investing activities. There too, KPMG is expecting to issue an unmodified opinion. The next item, KPMG's management letter. There will not be a management letter because KPMG did not find any items to provide any notice to the audit committee about. That would have occurred if there were any significant deficiencies or material weaknesses associated with our internal controls. Tab 4 includes our supplementary information. We have our listing of budget versus actual expenditures in that material, as well as a listing of bonds and notes outstanding. And then we have further detail on our financial statements. So we have our schedule of assets, liabilities, and net assets, our cash flows, and our statement of revenues, expenses, and changes in net assets. And those are provided on a programmatic basis in the supplementary information. And in terms of the revenue, expenses, and change in net assets, that also provides differentiation between the conduit debt and the DASNY operations. Tab 5, we have the required communications letter from KPMG, and they'll be going through their materials in just a moment. That gives them the forum to talk to you about any significant or unusual transactions, any significant audit adjustments, any reserves for uncollectible accounts, disagreements with management, or any significant difficulties that they've encountered during the audit. The last section, tab 6, has a glossary of financial terms, and that's issued to you to help to facilitate your review, just as a quick reference in case there are any of the terms that you're not as familiar with. We are required to file our financials with the Office of the State Comptroller by June 30th, and during tomorrow's board meeting, you will have a resolution to adopt and approve those financials for filing with the state. With that, I will turn it over to Greg Driscoll for KPMG, unless there are any questions on the materials that I've gone through thus far.
Great. Thanks, Kim. Good afternoon, everyone. We appreciate the opportunity to present the results of our audit of DASNY's 3/31/16 financial statements. You all should have a presentation booklet in front of you that'll summarize our prepared remarks for the day. And Kim mentioned behind one of the tabs, there's what we refer to as our required communications letter. That letter is essentially a formalization of what we'll be presenting today during the meeting. So opening the cover and taking a look at the contents, we will quickly go through the audit engagement team. We'll talk a little bit about the scope and deliverables and the responsibilities of the various parties and stakeholders to the audit. The core of the presentation will revolve around the summary of results. We'll also talk about how we consider fraud as part of our audit approach. And then lastly, we'll wrap up with detailing the involvement that we had of specialists within the audit team, as well as some remaining audit items, which at this point are fairly limited. And then an appendix for your reference are some areas of audit focus that essentially reprise what we talked about in the audit plan, and there wasn't any variation from the audit approach in the audit plan, so we figured we'd stick that in the back as an appendix for your reference in case you had questions. So as far as formal introductions, and maybe as we get to the engagement team, we'll kind of do that simultaneously. The team did not change from the audit plan, so this org chart looks essentially the same as it did from the audit plan, but more formal introductions of who's here today. To my right is Benny Hadnot, Managing Partner of Watson Rice LLP, our MBE partner here on the Dormitory Authority audit. Sitting across from me is Jeff Koch, the Senior Manager from KPMG on the audit. Two over from Jeff on the other side between Mike and Karen is Marie Zimmerman, a consulting partner that we have here on the DASNY audit. And then back over on this side of the table to Benny's right is Annette Hale, the manager from Watson Rice that assisted us with the engagement this year. So again, from top to bottom, as we said at the audit plan, we had a good deal of experience with the DASNY audit, which certainly I think facilitated the execution of the audit. With that, I'll turn it over to Benny for a couple of remarks at the bottom of the page there, just talking about the relationship that KPMG and Watson Rice have had in the context of the DASNY audit.
Oh, thank you, Greg. In fact, it says 6, but it's actually the 7th year of the arrangement, and it has been an overall success. I just thank DASNY for taking the chance on us, our team, and it has been a success. We've been able to achieve the objectives that you really wanted to achieve. So that's good. We have one team. It's a side-by-side collaboration in all phases of the audit, which includes the audit planning, control, evaluation, substantive testing, and the completion. So our staff, after 7 years, we have had the opportunity to really get a good phase of the audit and get good training. And with that training, we'd be able to pick up some additional jobs.
Mm-hmm.
Okay, sure, good. So we had 5 team members this year, which include Ned as manager, me as partner, and it was all levels of experience, and we contributed approximately 30% to the total audit engagement. As I say, so it was successful, and we're pleased that KPMG and the whole team was able to meet the objectives, was to get the audit report delivered by the due date.
Yep.
Okay, thank you.
Yeah, and
The last, not even bullet point, last item on the page, has the total number of engagement hours remained fairly constant over the 7-year period?
Yes, sir. In fact, they increased from the beginning, and I think in the beginning it was only maybe a little bit over 20, and then each year it has increased to. And in fact, the key is that we've been getting more than involved in other aspects of the audit. So it's been a substantive relationship. All right.
Yeah, and we've tried to increase the responsibilities of the higher Benny as partner, Annette as manager, as we've moved along with the relationship. So I think that's accounted for the increase in hours as we've gone. Great. So with that, we'll move on to the scope and deliverables. And I should have mentioned at the top, if you've got questions, which the chairman has availed himself of, please ask them as we go along. We certainly welcome them, and I'll probably forget what I said if you wait till the end and ask me about something 15 minutes previous. So looking at the scope and deliverables, the scope here, the objective of our audit of the financial statements is to enable us to express an opinion about whether the basic financial statements have been prepared by management with the oversight of the audit committee, presented fairly in all material respects in conformity with generally accepted accounting principles. We plan and perform the audit to provide reasonable assurance about whether the financial statements taken as a whole are free from material misstatement, whether from error or fraud. We cannot provide absolute assurance for a couple of reasons. One, we don't audit every transaction that DASNY enters into during the year. Two, the financial statements involve estimates and assumptions about future events, the outcome of which is uncertain. And then three, given the nature of fraud, we cannot provide absolute assurance that there is no fraud in the financial statement. So that is why you have reasonable assurance as opposed to absolute assurance, but fear not, reasonable assurance is still a high level of assurance, even though not absolute. The audit includes performing tests of the accounting records and other procedures that we consider necessary based on our risk assessments for the various financial statement accounts. And then in addition to performing those tests of the accounting records and such other procedures, we evaluate the appropriateness of accounting policies applied by management and the reasonableness of those significant accounting estimates made by management, as well as reviewing the financial statements for their overall compliance with GAAP from a presentation perspective. Kim went through the deliverables in your book. They're the same as here, listed here. The auditor's report on the basic financial statements that will have a date out of tomorrow, June 22nd. The auditor's report on the supplementary information, the report on internal control over financial reporting and compliance and other matters based on an audit of financial statements performed in accordance with government auditing standards. That is a report that is required for us to issue under government auditing standards, and that, as Kim pointed out, would include any material weaknesses or significant deficiencies relating to internal control over financial reporting and any material noncompliance with laws, regulations, contracts, and grants. And again, you'll see in the results there were none of either, so nothing to report. We issue a report on the compliance with Title II, as Kim mentioned, and then lastly, our letter to the Audit Committee providing our required communications under professional standards. Moving on to our responsibilities, and we covered this at length during the audit plan session, and they haven't changed from prior years and haven't changed from the audit plan. So we'll just pick out a couple of, they're all important, obviously, but we'll pick out a couple of the key ones to reiterate here as part of the presentation today. And on the management side, management's responsible for fairly presenting the financial statements in conformity with GAAP, and they're also responsible for establishing and maintaining effective internal control over financial reporting. And the last one I'll point out, just given where we're at in the audit, is that management is responsible to provide the auditor with a letter confirming representations about certain presentations in the financial statements, the existence of any significant deficiencies or material weaknesses in internal control, an acknowledgement of the responsibility for the design and implementation of programs and controls to prevent and detect fraud, and then the responsibility for adjusting the financial statements for any material misstatements relating to accounts and disclosures, which, to foreshadow, there will be and was none, but we'll talk about that in the audit results. The Audit Committee is responsible for the oversight of the financial reporting process and oversight of internal control of financial reporting, as well as the establishment by management of programs and internal controls designated to prevent and detect fraud. And the combination of the management and the Audit Committee are responsible for, again, establishing and maintaining those internal controls to prevent, deter, and detect fraud, and setting the proper tone and creating and maintaining a culture of honesty and high ethical standards as it relates to financial reporting. And the key item here at the bottom, the audit of the financial statements does not relieve management or the Audit Committee of their responsibilities. Ultimately, the preparation of the financial statements is the responsibility of management with the oversight of the Audit Committee. On our side of the ledger, if you will, KPMG is responsible for conducting our audit in accordance with professional standards, including those standards promulgated by the AICPA, as well as government auditing standards issued by the Government Accountability Office. They are generally similar in most regards. In fact, government auditing standards will make reference to the AICPA in many cases. The largest difference that you all would see, again, is the issuance of that report on internal control over financial reporting and compliance in other matters. That is a specific requirement of government auditing standards that does not exist in the AIC professional standards. So that's where the differences manifest itself most evidently. We have a responsibility for forming and expressing an opinion about whether the financial statements that have been prepared by management with the oversight of the audit committee are presented fairly in all material respects in conformity with GAAP. We have a responsibility to communicate to the audit committee in writing all significant deficiencies, all and any, I guess I should say, significant deficiencies, material weaknesses, and internal control identified in the audit, and reporting to management any deficiencies that in our professional judgment are worthy of their attention. And then lastly, the last item on the list there is we have a responsibility to review other information not covered by our audit report and documents containing the audited financial statements. And the one that we look at annually is DASNY's annual report. That will, amongst other accomplishments and achievements during the year and letters from the president and other information for the populace, they include the audited financial statements. So we have a responsibility to read that other information, to determine whether or not there's any information in the sections outside of the financial statements that have information that conflicts with the financial statements. If we find any such information, we would raise it to the attention of management to resolve it, and if we cannot resolve it with management, we would raise it to the level of the audit committee. We've not had conflicts in that regard in the past, and we expect the annual report to come sometime towards the end of the summer, early fall. So again, not expecting any issue there, but we do have that responsibility to review the other information that when it is included with the audited financial statements. Moving to the summary of results, so page 11. As far as the audit of the basic financial statements, as I alluded to, there have been no significant deviations from the audit plan as presented to you back in November. And again, as a refresher or reprisal of those procedures, we've included in the appendix some of the audit focus areas and the specific procedures performed in those areas. As Kim mentioned, we are expecting to issue an unmodified opinion on the basic financial statements dated tomorrow. We say expected just because there's no substantive audit work to be completed. It's just a matter of having the board approval of the financial statements, obtaining the representation letter, and then we will be set to issue. So there's nothing to be read into the expected other than just getting the representation letter and the approval of the board tomorrow. DASNY's accounting policies are described in Note 2 to the financial statements, and they're generally consistent with those applied in prior periods, with the exception of changes resulting from the adoption of GASB Statement 68, Accounting and Financial Reporting for Pensions. And we've talked about that standard a number of times with the audit committee, and Kim will go into her presentation. We'll talk a little bit about the effects of implementation, so we'll leave it for that. But the policies around the accounting for the DASNY's participation in the New York State and local employees retirement system has changed with the implementation of 68. As part of the audit, we've had discussions with management about the quality of such accounting policies as applied in financial reporting, and they do appear to be appropriate given DASNY's circumstances. There were no transactions that we identified that were deemed both significant and unusual or that lacked authoritative guidance or consensus. We evaluated management's judgments and assumptions relative to accounting estimates in the areas listed there, the leases and loans receivable, in that case specifically related to the allowance for uncollectible accounts, the OPEB liability, the OPEB liability, as I mentioned, the net pension liability, which again is new with the adoption of GASB Statement 68. We looked at the assumptions around interest rate swap valuation, and then certain accrued liabilities where management makes estimates of work that has been completed but not invoiced by year end. We had no proposed uncorrected or corrected audit adjustments. As both Kim and I have said at this point, we had no material weaknesses or significant deficiencies in internal control over financial reporting identified as part of the audit. We are not aware of any consultation by management with other accountants regarding current year transactions. We had no major issues to be discussed with management, the results of which were a condition of our engagement. We had no disagreements with management, no significant difficulties encountered while completing the audit. There currently are no unresolved accounting or reporting issues. And we had certain significant written communication with management, which includes the engagement letters that the that the audit committee is copied on at the beginning of the engagement, and then there will be the management representation letters at the end of the engagement, copies of which will be attached to that required communications letter that I referenced. Kim mentioned the reports on investment compliance and supplementary information. Unmodified reports are expected to be issued on those as well tomorrow. As Kim also mentioned, as far as the management letter goes, we did not identify any matters through our testing that would require the issuance of a formal management letter. And then lastly, as far as independence goes, we can confirm that as of today, and unless something happens tomorrow, that we are independent accountants with respect to DASNY under all relevant professional and regulatory standards. And again, as we mentioned to you last year, we do have a manager in our Albany office in the area of information technology audit and assurance that is the son of a DASNY board member designee. We evaluated that relationship and determined it had no bearing on our independence. That manager is not involved in the DASNY engagement and has not risen to a level of the firm where they can influence the judgments made by the audit partner and the concurring review partner. With that, I'll turn it over to Jeff to talk about the consideration of fraud and get you updated on the specialists and where the last little bit to complete the deliverables.
Sure. Thanks, Greg. Starting on page 13, we have summarized some of the procedures we consider when we perform our audit. As Greg alluded to, our responsibility for the audit is to plan and perform the audit to obtain reasonable assurance that the financial statements are free of material misstatements due to error or fraud. In performing those procedures, one thing we do at review, we perform a risk assessment and determine whether there's an increased risk in fraud anywhere throughout the audit, and ensure our audit procedures are designed and performed to address those risks. Additionally, we will make inquiries of key members of management, internal audit, and others within the entity about if their awareness of any fraud or violations of laws or regulations. Additionally, we'll perform manual journal entry test work where we'll review the entries to ensure that there was no override of management controls, that different individuals are preparing and posting journal entries. There's no undue pressure put on anyone in the organization to post an entry to your financial statements, as well as reviewing those post-closing journal entries for the same types of considerations. As requested from the RFP as well as by the board, we do confirm 100% of cash, investments, and bonds outstanding. Those procedures resulted in no issues found from the amounts that are recorded in your financial statements. We further review significant accounting estimates to determine if there's any indication of a management bias in preparation of those estimates, as well as update our understanding of DASNY's ethical and accountability program. And as Greg alluded to before, during these procedures, no instances of fraud were identified by us throughout our audit procedures.
May I?
Yep.
Question, I'm sorry.
Sure.
Actually, I had two questions. Generally, do you all see fraud out there in the community? I mean, I'm sure that you all audit a lot of other government agencies and authorities. Are you seeing instances of fraud?
Generally, and again, our focus, when we talk about fraud, the focus is fraudulent financial reporting.
Yes.
So there are other aspects of fraud that wouldn't be within the purview of the audit. The focus is on fraudulent financial reporting. Okay. And as a general rule, and maybe making some generalizations, when you look at the governmental industry as, say, compared to a public company, the motivations to engage in fraudulent financial reporting typically aren't there. Management's compensation typically is not determined based on results. There typically aren't analysts' expectations. And when you look at the weighing of someone who might be considering engaging in fraudulent financial reporting, the benefit versus the penalty if they're found out isn't there. So the other thing in the government space in particular is that oftentimes the transactions don't lend themselves to fraudulent financial reporting. So if it's a software company, you have complicated, software contracts where, there's a lot of interpretation and things. In the governmental space, as a general rule, the majority of transactions are cash-based, fairly quickly after year-end, not providing a great deal of opportunity for fraudulent financial reporting. So kind of some color around the answer that I'm going to give you. No, it is not terribly common where we will see in the government space instances of fraudulent financial reporting, if that answers the question.
It does, and thank you very much.
Great.
My second question has to do with the management letter. In the world in which I came from, having a situation where there is no management letter issued because there's nothing that management needs to hear
Yep.
that they might be doing differently is a wonderful thing.
Yep.
I don't know whether it's happened here before, whether, okay, I thought it might have. Thank you.
Yeah.
It's terrific. Are there a lot of situations in the government space where you don't issue management letters? A lot. I don't know what that means.
Sometimes it depends on the complexity of the operations, the breadth and depth of the operations, where as you get less centralized, you're going to have the opportunity for some controlled departures, I guess we'll say. So and I don't want to say the smaller, but I'll say the more centralized, the narrower the operation, you're going to see the more likelihood of a management letter. But certainly, I think if I were to grade DASNY on a scale, it would certainly be to the stronger end of the internal control perspective.
Terrific.
In the government industry, yeah.
Thank you.
Sure. Jeff, turn it back over to you.
Sure. So moving on to page 15, this is where we'll talk about the involvement of specialists. So we do have our normal engagement team who reviews the transactions on a day-to-day basis. And in certain situations, we bring individuals that have been specially trained by our firm to perform various tasks. The first identified our information risk management team, or IT specialists, who during the current year audit reviewed the IT general controls of JD Edwards and SunGard, as well as certain IT applications. During those procedures, they determined that the general IT control environment was reliable, and there were IT controls that we could rely on during the current year audit and didn't have any significant issues there. The second is we involve a tax specialist who reviews DASNY's tax-exempt status to make sure there's no issues out there as far as DASNY being a tax-exempt organization as a governmental entity, and no matters were raised to her attention. In the regards to actuaries, similar to what we've done in the past with DASNY's OPEB obligation, we involved an actuary to review and evaluate the method and assumptions that are used to estimate DASNY's OPEB liability. And based on those procedures, he determined that what is being used by DASNY is a reasonable estimate for the current fiscal year. The next, we have our evaluation specialist, and what we use is for the investments held by DASNY that are marketable, we send 100% of those marketable securities off to our pricing specialists, who use 3 independent sources that DASNY does not use to price their securities to determine whether they fall within a tolerable range and are reasonably priced, and there were no issues identified during those procedures for the current fiscal year. The last specialist is our quality control review partner, and they participate in our planning discussions, review significant areas in the account, as well as the financial statements to make sure that the quality of the financial statements are appropriate in accordance with the GASB requirements. The last item we have listed here are the remaining audit items, which Greg had alluded to before. The first is, with the concurrence of our issuance of the report, we will obtain a written representation from management over key representations that they make as part of the audit. The second item on our list is that sometime over the summer we'll be issuing the independent audit report on the 45 individual restricted debt issuant financial reports. And the final item is a review of DASNY's annual report, as Greg alluded to as well before.
So again, that concludes our prepared remarks. At your leisure, you can have a look at the areas of audit focus. But as far as prepared remarks for the committee today, that concludes what we have. So we'd be glad to take any further questions that the committee or anyone at the table may have.
Questions?
I don't have any more.
Okay, all right.
Great, thank you. Again, we appreciate the opportunity to present before the committee. Thank
you,
you.
Greg.
Thanks.
And Jeff. Thank you. I have a motion to recommend to the full board the acceptance and approval of these. Not yet?
No, we'll go through some of the financial highlights.
Okay. Okay.
We can return back to tab 2 in the binder. I'd like to go through and highlight some of the key results that we had this year for DASNY's financials. As I noted earlier, and Greg pointed out, we do expect an unmodified opinion to be issued tomorrow. A couple of the major items that you'll see different in the financials this year versus last, most notably perhaps is the fact that the statements are issued for March 31st, 2016 only. They're not comparative to the prior year. That has to do with the fact that, as I mentioned earlier and Greg did, we implemented new rules associated with how we account for our pension costs. As a result of that implementation, we didn't have the information that we needed in order to restate our 2015 financials. Management felt, and KPMG agreed, that that might be confusing to the users to not have comparative line by line, which lines are in sync and which ones aren't. So we thought it best to just issue the 1 year's worth of financials. We do, as you saw and you'll hear, we do have an analysis of the 16 results versus 15 in the MD&A, which we'll be going through in a minute.
And are the rules that we implemented rules where we were required to implement, or did we do this because it helps us to better account for our pension dollars? It was pension, didn't you?
Yes, it was pension, and we were required to do so.
Okay.
And that resulted in a reduction in the pension cost?
Yes, it did.
Did it really?
Yep.
Well, that's terrific.
That's why that's such a good
That's
question.
that's a great segue. Thank you so much.
It's not a-
So, we'll go right over there to the next section. If you turn to page 5 in the MD&A, one of the other changes you might have noticed is the addition of an executive summary within the MD&A. And one of the items in that executive summary does talk about the change in those pension rules. And I do want to highlight some of those changes and the implications here. So under the prior rules, what our expense was in any given year was whatever the state system said we needed to contribute. So that's been about $8 million a year. Under the new rules, you look at the company's liability. So actuaries determine what the total estimated liability is going to be over all of the participating employees' retirements. They discount that back to a present value, deduct assets, so funds that we've put into a trust to pay for those obligations, and that becomes the liability that needs to be put on the books. And what you do is recognize the portion of that that relates to service that's been provided to date for the employees. So if you take an employee that's worked for 1 year, the actuaries believe that that person will retire with 10 years of service. They'll look at all of their different tables and say, how long is this person going to be retired, have benefits, are they married or not, what's their final salary, all of those sorts of calculations. Say, here's what we believe DASNY will have to pay for this person's retirement over X number of years. That person's worked 1 year, so 10% of that needs to be put on the books as a liability. Again, net of assets that have been set aside in trust.
It's reasonable.
So what happened this year was we have historically then recorded an expense of $7-8 million a year. This year, when you look at the liability at the beginning of the year and the end, it ended up being just under $5 million of a change between those two periods of time. And so we did have just about a $3 million reduction in our expenses as a result of the pension.
Those are just bookkeeping expenses. It's not a cash saving.
That's correct.
There's no cash was saved.
That's correct.
Yeah.
In the long term,
Yeah.
you may get that, but what happens is, since we still paid out the $8 million, that differential essentially becomes a prepaid
Yeah.
asset
Yeah.
on the books, and each year that gets taken into account when the liability is recalculated.
So each year it could actually appear as additional cash on the balance sheet.
It's not cash, but it
depending.
would be an asset. It's
an
a
asset,
deferred
yeah.
inflow. So yes, it sits on the asset side of the balance sheet.
It also can go the other way.
It can. Yes, it can.
But it didn't.
No. It can't go the other way.
But it could.
Yeah. No. Thank you. It was just a great year.
The trust.
It's
Are there
extraordinary.
OPEB rules? Who decides how that trust is managed? What are the rules that apply to the management of the trust that the funds go into?
Those guidelines are determined by the plan, so in this case, the state employee retirement.
Okay,
plan.
all right.
Because that trust you refer to is the state employment.
That's right.
Retirement fund, that's not a trust
So
that
what
DASNY
happens
has.
is the entire plan, you have the liability calculated, the entire plan has assets set aside. We get a proportion of that. And they send us schedules and say, your share is this amount.
Thank you. Thank you very much. That's really clear.
That
Do we
did,
have, for post-retirement benefits, do we have any trust funds that DASNY runs? Like for healthcare? No.
We did, as part of this implementation, we did restate our opening unrestricted net position. So again, it's kind of taking into account the fact that we've paid in, contributed more than we needed to under the new rules. So there was it was just under $1 million of,
But that's something we
an
don't have to do
increase
again.
in the
Right.
unrestricted net position.
That's the only time we'll have to do that unless the rules change again.
Yes.
Okay, terrific.
I guarantee that won't happen.
No, in fact, it's more likely to happen, isn't it?
It does tend to. This brings the governmental accounting in line with the private industry as well.
Thank you, that was really.
You're welcome. The other areas I wanted to note in the executive summary related to our lines of business. So on the construction side, we were happy to see an expansion in our client base. So in terms of state appropriations, there was $100 million appropriated for the New York City Housing Authority. Made various improvements, right? We've talked about that at the board meetings. And DASNY was designated to provide the related construction services. And we also have 60 projects for approximately $166 million for the Governor's Office of Storm Recovery, working on the community redevelopment program. So while we don't see great impacts in 16 in the numbers for those, certainly it's good news going forward as we continue to see more opportunities for our employees to provide services to the state. On the debt issuance side, as you might have recalled from earlier board meetings, we did have a record year of issuances for 16, issuing over $8 billion in debt, breaking the record we set in 2009 by just about $1 billion. So we thought that was worthy of note as well. Overview of the results for the year. We did lose $45.7 million during the course of the year, and that was primarily on the conduit debt, the debt issuance side, and really primarily related to early redemptions and transfer of funds over to escrow, and that was really the biggest cause for that. DASNY's own internal operations, though, did lose $1.4 million as well. That was really driven by the fact that we had essentially break-even results for our construction management activities as well as our debt activities, both issuance and the subsequent bond administration. Now, on the construction side, we expect a break-even result anyway because we bill our clients at cost, because that's essentially, that work is almost all public work, and so that's a cost-based arrangement. In terms of the debt issuance side, as I said, that was a little bit favorable, but between the two, what we didn't have was enough money to cover the costs, where we have a variety of New York State initiatives that aren't supported by any separate appropriations. And in the past, we've been able to cover that with favorable earnings on the debt issuance and bond administration side, and we did not have the available funds to do that in the current year.
Quick question. Without the change in the pension rules, would that loss have been closer to 4.47?
Yes. Now, you might recall that we talked about where we thought we would end the year on the DASNY internal operations during our March meeting, and at that point we thought we were going to be somewhat favorable. So there were two drivers for that reason. One relates to our retirement benefits other than pension, or our OPEB, they're basically our health care. And while we know what the expense is going to be, what we don't know is how that is going to be allocated between our public clients and our private clients. What happened in this time period was when we booked the final numbers, there was about 1% more that got allocated to the private clients. It doesn't sound like a lot, but when you're applying that to $140 million liability, then it becomes a big number. So we had almost $1.5 million of additional losses at work from what we were anticipating. And the other, again, related to the unsupported New York State initiatives, where at the time we did not think that we were going to have as much time spent by employees on those initiatives. And when all was said and done, and we looked at the numbers over the course of the year, we didn't have as much of, what happens is we bill our direct costs, say on construction, and indirect costs follow. So if people are working on things like these unsupported New York State initiatives, there's no place to bill them, and the associated indirect costs, administrative costs, also don't have a place to get billed.
It's really complicated, isn't it?
Yes, it is.
It really is. Thank you for that.
Any questions on? Okay. So moving on to page 8. We'll take a look at the bond issuances for the year. A few items that I wanted to point out here, notably the $8.2 billion that we issued for the year, and that was significantly higher than the prior year. It was a $3.5 billion or 75% increase. The charts at the bottom, the one on the left, shows you that that was primarily coming from refundings. And the charts on the next page would show you that that came largely from our independent clients, the private side. In total, as it has in the past, our new money issuances and refundings make up the majority of the issuances that we have. In this case, it was 77% for the year. That was actually down from the prior year, but that has to do with the fact that you can see refinancings also went up in the current year. So that just changed the overall percentage. On the right-hand chart, you see that we have a lower overall allocation to our public clients for the year. Still by far the biggest piece of the issuances, but just because those refundings were driven by private clients, it drove the overall percent of the current year down from 86% public as it was last year, down to 68%. Page 10, we have our bonds that were retired over the course of the year. We had $6.6 billion worth of retirements in the year, and that was largely coming from bonds that were refunded by the issuance of new DASNY bonds. That's the best kind of a retirement to have, right? That was over 50% of the total retirements for the year. Here we also saw a reduction in the distribution between public and private, down from 66% in 15 down to 50% this year. And here too, that was because the refundings really had to do more with the private side, as they were taking advantage of lower interest rates in order to reduce their outstanding debt as well as their interest expense. On page 12, we have our bonds outstanding as of the end of the year. We ended the year with over $47 billion in bonds outstanding. Here, the distribution between public and private stayed relatively consistent between the years, just going up a little bit from 66 to 68%. And we did have a slight increase for the year, just $1.6 billion of additional bonds outstanding. On page 13 and 14, we have information on the construction management activities. Here, we ended the year with total disbursements of $3.1 billion. That was about $300 million lower than in 15. And here it was really a combination, almost a 50-50 split between our certified disbursements, which are really just reimbursements to our clients, versus the DASNY managed projects. So although most of the dollars are on the certified, the reimbursement side, what impacts our earnings is really the DASNY managed, because again, that's primarily our public clients, and we're able to recover our costs. So it's our direct labor costs with a multiplier to recover indirect costs, parts of the building around us, other infrastructure costs. On page 15, we have information on our statement of net position. And there you can see our assets and liabilities are up some from last year. They both increased by about $1.6 billion, and that's associated with the higher debt outstanding that we talked about earlier. And on page 17, we have our investment balances. We ended the year with just under $3.7 billion worth of investments. That was a $100 million decrease, so not much of a change from 15, and the decrease was really due to new money issuances that were offset by reductions in investments for debt service as well as debt service reserves. And you can see from the chart that, by and large, the investments are for our bonded construction and grants, as well as debt service obligations, with the two of those making up 80% of all of our investments. Are there questions on the financials before we move on to the investment report?
It's interesting, the decline in reserves in the transactions that we're doing. I didn't realize that it affected the investment balances as much as it does. That's a very interesting correlation.
And I think that a lot of what you're seeing there, since we hadn't issued a lot of new debt
Yes.
for this fiscal year
Yes.
under the new guidelines, but certainly we had made exceptions
Yeah.
that were in the past.
Yeah.
But you also see those reductions come over time, because a lot of times the amount that needs to be held in reserve is recalculated over the life of the bond based on
Got
what
it, got
future
it.
maturities are,
Got it.
as well as refundings can also cause reductions.
Wow, that's really something. Thank you.
Any other questions?
Motion time?
Can I just have a quick question? How much of this do you intend to go over with the full board tomorrow?
The initial section on, more on the executive summary,
Okay.
the earnings itself, with the lines of business, not
Right.
so much the details on the different lines of business, the level of debt.
No, I thought that was very interesting, and I just thought that the full board might also find that interesting. So.
I'm very much open to,
I mean,
to whatever
I-
suggestions.
Obviously,
It's hard
your
to tell
chair,
how much of
obviously,
this- yeah.
John and Al would be the ones to look to, but I thought it was a very interesting presentation.
I'm
Yes.
sorry, I didn't hear the.
That I asked what she's going to go over with the whole board tomorrow.
Oh.
And whether she would go over the
If-
lines of business specifically, because I thought that was very informative.
It really is, and clear.
Myself, but-
It was really clear, thank you.
Thank you.
There was something. I lost my thought.
The construction management, making money?
No, we'll talk. So, are you looking to get a motion?
Can I have a motion to approve the financial statements and to recommend to the entire board approval of the financial statements tomorrow? Beryl?
Like to move?
John? All in favor?
Aye.
Any opposed? Thank you. Jim, back to you for the annual investment.
Thank you. Behind tab 8, we have our annual investment report. Similar to the financials, we are required to file this with the Office of State Comptroller by the end of the month. The major areas in the report include our investment guidelines, DASNY's financial statements, as well as our investment income for the year and fees that we paid. On page 16, there's a notation at the top of the page that in terms of any amendments to our guidelines, we did not have any during the current fiscal year. On page 18, we have a report on our investment income. We earned $14.5 million during the fiscal year. $1.9 million of that was from our construction funds, and the balance, $12.6 million, was a combination of the remainder of our funds. On page 19, we have our fees that we paid over the course of the year. We paid I'm looking for that to be million. $815,000 to our trustees. They would have liked it to have been millions. Trustees and custodians for the services that they provided.
how are New York State's services in this area much different than the previous four?
I'm going to have to defer to my right hand.
The New York State fees are the custodial fees that we pay on programs that they administer for us. I believe the Upstate Community College program and MAC Workers' Comp program, and I think a couple of the old MAC accounts that we came from MICFA. They charge, I think, based on staffing hours that they use in order to administer programs, so their fees are quite high.
The fees are high, and I assume that they do that because it's in the statute.
I don't know if the statute in the bond resolution.
We're required to let them manage it.
Manage it, yeah.
No, it's a requirement,
Yes.
so it's not something that we should be putting out for public proposal.
No. It's not our choice. But.
Any questions?
Thanks.
Can I have a motion to approve the annual investment report and to recommend to the full board approval of the annual investment report?
So moved.
Second? All in favor?
Aye.
Aye. Any opposed? Motion carries.
John, before we move on, I would like to just take a moment now that we're through all of this, and I appreciate that you've pointed out that in some of these cases it really is quite complicated, the work that goes on behind the scenes. It is, and so I really want to take this opportunity to thank the people that made this all possible, because I can sit here and tell you all these things, but people had to teach me and tell me all of these things in order for me to relay them onto you, and to keep our books and records over the course of the year in order to get us to this position so that this meeting can go as smoothly as it has. You know, I rely very heavily, and DASNY does through me, on the experience, the knowledge, and the dedication of the entire finance team. But I do want to point out a few people in particular. First off, Karen Sider, our Assistant Director for Accounting and Financial Reporting, who's responsible for making sure that the day-to-day accounting is taken care of, it's done properly. And we're talking about 2,000 sets of individually balancing sets of books and records. So it is no easy feat to make sure that that is all done appropriately, and then to make sure that all of that has the appropriate audit support, and any questions that come up during the audit are addressed in a timely manner such that they can issue an unmodified opinion and not have any timing issues with the board or our deliverables. Karma Sees, our Assistant Director for our debt group. Karma manages somehow, I don't know how, but she manages to represent us as the authorized officer on virtually every debt issuance that we do, and at the same time make sure that all of the appropriate information gets to Karen and her group and Kim and her group to make sure that it is all put onto our books and records accurately, and then provides, as you've seen within the materials, an incredible amount of detailed data that is either supplementary or part of the financials, gets filed with the state. It's just an incredible task. The audit support that goes along with it, developing the footnotes, so thank you. Kim Ellis, our Assistant Director for Investments, just to make sure, we have about 1,000 different funds that she's responsible for managing. She needs to try to maximize the earnings for our clients, at the same time staying within the guidelines of DASNY and the state. And then every 2 weeks, when we have a check run, she needs to make sure that the funds that are needed to pay all of the bills are coming from the right places, that we have all of that. And that's probably on average about 100 different accounts that she has to make sure she's got money in the bank and not invested in order to meet those commitments. Heidi Lenge, who is not here with us, she's our Assistant Director for Accounts Payable. She makes sure that our clients and our vendors are all paid timely. She makes sure that all the documentation that they provide to us is good support for the disbursements that we're making. And we make somewhere around 550 disbursements every 2 weeks for those check runs. At year end, she needs to also make sure that those disbursements are in the right period. So did they belong to fiscal year 16 or 17? Jeff Arnold, who's with us, didn't manage to make it up to the table though. Budget manager, he's responsible for overseeing all of the DASNY operating funds over the course of the year, and he also took the lead on implementing the new pension rules that we put into place this year. So I would like to thank all of you, your dedication, your support of me, your support of DASNY, oversight that you provide your teams. I've not listed all of their names here, but certainly these folks couldn't have done it alone. But their oversight of their teams makes this all possible. And so I just want to make sure that we're clear on the record how much DASNY relies on them and how much I appreciate all of their help. I would also like to thank KPMG for making the transition of my first audit here a very smooth one. Thank you. I look forward to many years to come.
As do we.
May I say something? Not being a member of the committee, I guess I've said a lot already, but I apologize for reading longer. Thank you, Kim, for introducing your people and for letting us know how hard they work. Even in my advancing years, I seem to sit around a fair number of audit review, financial statement review tables, and I can tell you that one does not often see an audit that results in no management letter, and we've had several of them. This is what you all are doing is terrific here, and for those of us who are not on the committee but who worry about the financial statements and all the things that surround financial statements, thank you all very much for what you're doing. Last thing, you've stepped in here fairly recently, actually, and you have managed this with the kind of acumen and attention to detail that just makes me comfortable. And I want to thank you for that. You're doing it, I think.
I've had many tutorial sessions.
I'll bet you have. And
Not the least of which probably within the last couple of hours.
But what little hair I have left is not going to gray as fast, knowing that you're sitting in that chair. So thank you very much.
I'll just add that a question that I asked on Saturday was answered in a very comprehensive email from Kim on Sunday, and I asked her not to work anymore.
That was me.
But
My father was over on Saturday. I just replied then.
It's truly a pleasure. Gerard, you're next.
Well, good afternoon. Thank you, Kim.
Yeah, we did approve the investment. We're all set? Okay, good. Sorry.
So good afternoon. Thank you very much, Kim. Today I will be presenting you with our fiscal 2016 report to the authority's budget office. I will walk you through the report, starting with our accomplishments and initiatives I undertook as part of my effort to put DASNY's clients first. I will discuss the changes we have made to improve our MWBE contracting. I will then highlight the accomplishments of each of our two main lines of businesses, public finance and construction. That will be followed by a discussion about challenges DASNY faces, and then the metric analysis of the work we have done. So first and foremost, as you heard from Kim, we've had a remarkable year. And that remarkable year comes through a very collaborative effort across all of DASNY. As I had mentioned to you earlier in this year and last year, that we are focused on eliminating silos and making sure that there are synergies across all of DASNY. The $8.3 billion in bonds we issued for a private and public clients broke a fiscal year record. DASNY was named the #1 tax-exempt issuer in calendar year 2015 by the Bond Buyer and Reuters. DASNY also completed the highest value construction project in its history with CUNY's approximately $700 million Advanced Science Research Center. And we surpassed Governor Andrew Cuomo's 30% MWBE contracting goal on the New York State Office of Mental Health's $350 million Bronx Behavioral Center. We had a number of over 35% in that particular project. More importantly, we had a number that was very high in terms of local labor force participation. An exceptional project in terms of how the staff and the team continues to be a leader in moving MWBE participation forward and identifying ways that we could source opportunities for the labor force in a community, and certainly in the Bronx, which is an area where there's an incredible amount of opportunity for development and creating opportunities to equal the playing field. So that's a powerful statement on the part of DASNY. We worked with you, the board, to change DASNY's financing guidelines and policies to provide each of our clients with greater speed, certainty, and flexibility. And I can assure you that has been very well received across the entire industry. We're seeing opportunities, and we recognize that there continue to be challenges. I'd like to tell everyone, the board, and I remind staff that even though there are challenges with respect to the refundings, the reality is we're not on our heels. We're turning a corner. So that's how I'd ask you to really look at that. This was part of a broad initiative to put clients first and improve DASNY's process to be more responsive to their needs. Now, in support of our client focus, I thought it was very important to simplify DASNY. I realigned the organization to streamline operations and create efficiencies. The realignment, one of the big realignments that was very important in terms of our construction and overall, not just construction, but our procurement process, was putting our Opportunity Programs Group, which handles the MWBE contracting, alongside the procurement unit and the construction division. Together, they represent a new unit termed Resource Acquisition, and that is co-headed, by Lou Sorelli and Michael Clay. So that is really soup to nuts proposition in terms of how we look at our procurement process. The realignment also consolidated units that handle DASNY's finances, risk management, and insurance under the finance division under Kim. This improved the flow of information among these units and enhanced collaboration. Similar improvements were made across DASNY's entire organization. Now, as it relates to our MWBE participation, so you ask, what else can we do? We're leaders in that space. There's a lot more that we can do, and we are recognizing that MWBE participation is not in the province of only what was once the OPG team. It is all of DASNY's responsibility. And so in early 2016, our legal team, our construction team, OPG, technology, there were some other folks. We had a collaborative effort in which we had about 300 DASNY staff members were trained on the updated procurement procedures designed to increase MWBE contracting participation. Very important effort that we took part in. These changes will build on the success and leadership DASNY has already shown in the MWBE arena. As you will see in the metric analysis section of the report, we achieved an overall 25% MWBE utilization in fiscal 2016. Now, the vast majority of these results are based on contracts awarded when our participation goals were 20%. Now, as contracts that carry the 30% goal become the majority, as they come in force, we expect our percentages to climb. Now, I'll take you through the specific accomplishments in our two key lines of businesses, starting with public finance and then construction. Now, as I've already mentioned, we had a blowout year in public finance in terms of issuing $8.3 billion in low-interest bonds. We continue to have a very strong year this year. We delivered about $2.7 billion for independent private sector clients. That work included about $691 million on behalf of New York University and about $512 million on behalf of the Icahn School of Medicine at Mount Sinai. The remainder was issued on behalf of public clients. Now, our tax-exempt equipment leasing program delivered approximately $236 million in low-interest leases for equipment at healthcare and other organizations across the state. These low-cost financing tools are pivotal in keeping New York's world-class education and health institutions competitive. It was an incredibly successful year for public finance, and as I said, we're already off to a very fast start. Just this month, we closed on our largest private client offering in DASNY's history, with $829 million issued on behalf of NYU. Now, the NYU financing will help support NYU's School of Medicine's Langone Science Center. It is part of the scientific research corridor rising in New York City that DASNY is either constructing or financing. The corridor also includes Columbia University's Jerome L. Green Science Center, which was part of a $390 million financing package we delivered for Columbia in April. Now, the biggest highlight of our successful year in construction, CUNY's Advanced Science Research Center, is a leading element of this rising research corridor. DASNY provided both construction and financing services for ASRC. Now, combined, these centers will lead to breakthroughs in medicine and technology that will be critical drivers in New York's economy for years to come. Now, completing ASRC was part of a very strong year for the construction division. Overall, expenditures on projects that DASNY provided full construction services for totaled $611 million in fiscal 2016. We ended the fiscal year with a construction pipeline of 1,068 projects valued at more than $5.8 billion. The division's other major achievements included completing the previously mentioned Bronx Behavioral Health Center and a $31 million residence hall for SUNY New Paltz. Major ongoing projects include the almost $250 million South Beach Psychiatric Center for the Office of Mental Health. Meanwhile, DASNY is receiving new projects from the Governor's Office of Storm Recovery. These approximately 60 projects are valued at about $166 million. DASNY is also delivering on the $100 million allocation for public housing modernization and safety upgrades meant to improve the quality of life for New York City Housing Authority residents. Last year, this included scoping work for $42 million in security upgrades, such as cameras. Now, of course, needless to say, sustainability is very important. All of these projects are delivered with sustainability in mind. In the last fiscal year, 5 of our projects were registered with U.S. Green Building Council's leadership in Energy and Environmental Design program. That gives us a 100% compliance with executive orders related to sustainability. Now, as we highlight the opportunities and the successes, there are always challenges. And as I said to you, our focus is turning the corner, and you know, when the fastball comes at you, you know, you don't want to be on your heels. So our successes in public finance and construction, very critical, but we recognize there are always some issues that we need to continue working on. So while DASNY experienced significant growth in financing transactions, we recognize private clients continue to refund away from us, all right? So we acknowledge and recognize that we're not going to compete with those local development corporations that have a hold on private clients. That's just a reality that we have to come to terms with. But the changes that we've put in place have given us an opportunity to move forward. Now, as we said, DASNY's public finance business has been impacted significantly by the proliferation of local development corporations issuing tax-exempt debt. These entities do not have to comply with the same state oversight procedures that apply to DASNY. The rise of LDCs is compounded by the narrow spread between tax-exempt and taxable bonds. A number of DASNY private client borrowers have elected to finance taxably on their own. Now, in the construction division, expenditures have in fact dropped almost 18% from the previous fiscal year, though the number of projects increased by 4.9%. So we've got a lot more smaller projects, okay? And that's just the nature of what is changing, or a cycle in the public building infrastructure. So this represents a shift from larger, complex projects to smaller ones, creating a challenge to maintain a competitive cost structure, which we are always focused on. We're responding to those challenges. DASNY changed its financing guidelines and policies, as you know, to reflect market conditions. We previously reduced fees charged to private clients. We realigned the organization to create efficiencies, and we continue to take steps to reduce operating costs and expenses. Now, as we face those challenges, we must also continue to strive toward perfection in our project delivery. The metrics analysis reveals we met challenges in doing so. Construction projects were delayed due to errors and contractors' failure to perform. There were design changes that underwent lengthy client reviews. There was a fire that caused a delay while an insurance claim was settled. However, only one of 49 full-service construction projects valued at more than $1 million went over budget. This was the Advanced Science Research Center, which was 0.2% over budget. The remaining 48 were collectively under budget by 1.3%. Our public financings were executed at a very high level. Almost all fell within target ranges. If they didn't, in most cases, it was because the sale happened earlier than the benchmark period called for. So, in conclusion, it is DASNY's committed and dedicated staff that serves as the backbone for all that we have achieved and all we will achieve. So a special thank you to each and every one of them for working so hard. With their help, DASNY is playing a pivotal role in driving economic development across the state. This report, in highlighting our successes and our challenges, shows we still have room to grow. So we will continue to reach high. The possibilities are enormous, and they are, in fact, ahead of us. But I look forward to continuing to work with each of you on the board as we take full advantage of the opportunities set before us. So thank you very much.
Thank you. Thank you very much.
Are there any questions for John? Hearing none, could I have a motion to approve the Public Authorities Accountability Act annual report? Cheryl? John? All in favor? Aye. Any opposed? Hearing none, the motion is approved. Is there any other business to come before this committee? Can I have a motion to adjourn? John? Cheryl? We are adjourned. Thank you, everybody.
Thank you. George, good report. Thank you. Thank you very much.